The rand has hit its strongest levels in almost 3 years, trading at 6.77 to the US dollar at one stage this morning. This comes as the prospect of more cheap money out of the US boosts appetite for high-yielding assets, but at a cost to the South African economy. Joining us from our Cape Town studio is Chris Hamman, the head of fixed interest income at Sanlam Investment Management. Chris, thanks so much for joining us today. Let's start off with the fact that everyone's saying that the rand is overvalued by around 15%. Do you agree with this? Because others say that according to the PPP model, the rand is at fair value at this point in time.
Yes, good afternoon. Thank you very much for having me. I think Sanlam would probably agree with most commentators that the rand is overvalued. Of course, by how much is overvalued is sort of in the eye of the beholder, but 10% is probably about right. But we must now also bear in mind that most people look at the currency relative to the US dollar, which is by all accounts a very weak currency at the moment. So against other currencies, perhaps the overvaluation might not be as much.
Well, Chris, what's your view? Strong rand, good or bad? Because of course we have seen inflation easing well into the targeted range, and growth's also picked up over the past year, despite the strength that we have seen in the rand against the US dollar.
Yeah, I think that that's an important point. While I think Sanlam agrees with most commentators that the currency is on the strong side, I think where we definitely disagree is that the currency is having this very bad effect on the South African economy. There are clearly winners and losers. I think the more export-orientated sectors of the South African economy is probably going to struggle a little bit, but there are also winners in the South African economy, specifically in the secondary and the tertiary sector. So, the structure of the South African economy is changing, and I think the strength of the currency is in lots of ways only adding to that change, and in the short and medium term, it's obviously adding to some of the tension.
Well, Chris, also just focusing on the point that Paul Theron made, and he said for as long as there is going to be low interest rates in the developed world, this is going to prompt pension funds and it's going to prompt foreign investors to seek those high-yielding assets, despite the fact that we could see some negative news flowing through from various emerging markets, and of course South Africa being one of them. He also said that the stronger rand is here to stay. What is your view on that?
Yeah, that's a very interesting comment. I think I want to give one step back and then say that South Africa has been an emerging market since the late 1980s. Now at some stage, if you put in place prudent macroeconomic policies, then you start to emerge. Now in our view, that means that people actually start to notice a country. They start to notice that South African bond yields are fairly attractive. They start to notice that inflation is fairly low, and then of course it's obvious that we are going to attract certain flows. Now, so the South African economy is fairly small, so if that flows come in sort of in a wave, it might cause a bit of an overvaluation, and we're experiencing just that now. But to our mind, this is really a function of very prudent macroeconomic policies, at least over the past 15 years or so. So we actually think it's a good thing, despite the strains in the short term.
Chris, of course, we have the medium-term budget coming out towards the end of this month. We've had the Finance Minister, Praveen Gordhan, also Reserve Bank Governor Jill Marcus, talking about the rand quite a bit at functions yesterday, in fact, and saying that the strong rand was hurting sectors of the economy. Do you think the authorities should be doing something, and what do you think they can do at this stage?
No, I don't think, well, they should be doing something, but I don't think they should be doing too much to the currency. I think the big challenge in South Africa is to get people to work. In our view, the strikes during the third quarter has had a very negative impact on manufacturing in South Africa. You spoke earlier about the retail sales numbers; those were distorted by the Soccer World Cup. So I don't think one should look too much into that, and one should certainly not start to read the currency effect into that. So I think policymakers should really be concentrating on those parts of the South African macroeconomic policy that might have been lagging a little bit over the past 10 years. And that really talks to trade policy. It really talks to industrial policy in South Africa. So I think that is really where the challenge is. So I think that's the first part of my answer. The second part of the answer is that, if you say we want to weaken the currency, to which level do you weaken it? For some exporters, 8 rand might be fine, but then if you weaken it to 8 rand against the US dollar, then presumably 9 rand is even better. So where do you draw that line? It becomes a completely subjective call, and I think it's dangerous when governments start to interfere in a market like that. So, we will be a little bit nervous if that was to happen. And I think then thirdly, we've also heard noises that the currency should be fixed to some basket of currencies, or perhaps to a single currency like the US dollar. Now, of course, if the US dollar is very weak, it might sound attractive from an exporter's perspective to peg the dollar, the rand to the US dollar. But you know, the moment you do that, you lose control over monetary policy. So I think the range of options with regards to the currency is really very limited. And to my mind, it will probably be better to focus on domestic macroeconomic policies and, you know, accept that a volatile currency might, at least in the short term, have a negative effect on an economy.
Well, Chris, the pursuit of a weaker currency is obviously evident in many developed nations, many emerging markets, a lot of people intervening at this point in time. Some say it could all land up in tears. And of course, this is against the backdrop of loose fiscal policy, low interest rates, and some of these countries do not have product and labor markets that are flexible, such as South Africa. I mean, it's kind of a scary scenario at this point in time, but how do you see it all ending? Because at the end of the day, the rand has, in fact, been stronger against the US dollar than weaker on a long-term basis.
Yeah, that is of course the question that everyone is asking at the moment, and we've seen this before. We've seen this before at the start of the 18th century with the Mississippi bubble, created by someone who also wanted to reflate an economy, and we've seen that now. So we have had episodes of this before, and in the past it all ended up in tears. I don't know if one can hedge against it. I don't know if you can put in place policies to hedge against it. We're all concerned about the quantitative easing in America, and the fact that the liquidity is not staying in America, it's going into emerging markets, including South Africa and others, and that's in lots of ways why we are where we are at the moment. You cannot hedge against it, but what you can do is put in place prudent and balanced macroeconomic policies. And if it really goes horrible, then South Africa will probably also be affected. But I really do believe that those countries with more prudent macroeconomic policies, and I would definitely count there South Africa, has the ability to go through that on a relatively good basis and probably recover much faster than others. So I'm afraid that we don't know of any short-term solutions that will really hedge South Africa against this massive global liquidity that's hitting emerging markets.